Good morning and thanks so much for joining in. You're watching Ask Profit on NDTV Profit and my name is Alex Mathew. This show gets you answers to all of your stock-related questions, and to that end, if you've got them for us, you can send them on that number that you see flashing on your screen right now. Let's take a look at where the markets are right now. And it was a positive handover once again for the Indian equity markets, and the overseas markets looking sanguine. Of course, focus is on macroeconomics in the US. There was something a little bit off with that chart, but the Nifty 50 currently trading with gains of about 0.5% or thereabouts, if I'm not mistaken. Let's pull up where it stands right now. In fact, it's gaining only about 0.2% right now. It has given up early gains. You have the broader markets, in fact, that are looking better at this juncture. And let's pull out the mid-cap index. The mid-cap index gaining about 0.5% or thereabouts. A small cap index gaining about 0.3% or thereabouts. Overall, the market breadth in favor of the advances right now. I'm looking at nearly 2 gainers for every decline. That gap has narrowed somewhat over the course of the last half an hour to 45 minutes or so. All sector indices are in the green right now, but it's led by the automotive index, and we'll talk about that in just a bit. Of course, the big talking point is the EV scheme that was launched yesterday. Among the key performers on the Nifty 50, you have HDFC Bank that is leading the gains in terms of the contributors, but not big moves. You have Bharti Airtel as well as Kotak Mahindra Bank and Bajaj Auto once again leading the gainers. Bajaj Auto has gained quite a bit over the course of today's session and yesterday's session. But let's talk about the automotive space, and let's focus in on the companies that stand to gain and lose on account of the latest EV policy. We've got Puneet joining in to tell you about the key highlights and the winners and losers. Puneet, it's not winners across the board, right?
Yeah, definitely. So Cabinet approved the new FAME 3, or new name is PM E-Drive scheme, roughly outlay of about 10,900 odd crores. But there are within these segments, and we had highlighted that yesterday as well, that there would be some segmental winners and losers. And let's start with the losers first, because it's the passenger vehicle segment in the electric vehicle powertrain segment specifically that's going to be the losers. So Tata Motors, Mahindra and Mahindra, as well as Maruti Suzuki. There's in the previous FAME 2 scheme, there were around 55,000 electric vehicles that would be eligible for these subsidies, but now in the new scheme there's no such provision, so you won't be incentivized or given any discounts for your new purchase of an electric car. Specifically, the biggest gainers are the electric vehicle bus segment specifically, because there's a large part of the bus price which is given as subsidies in this particular scheme, and the same thing is continued for electric two-wheelers as well. While we are still awaiting the per unit cost, so currently there is about 10,000 rupees incentive for per kilowatt for electric scooters specifically. So if you have a 2 kilowatt electric vehicle scooter, you get 20,000 rupees as discounts. So that detail hasn't come out in this particular notification yet, but there's something at least for the electric two-wheelers as well as the EV bus segment. Now we did speak to JBM Auto in the morning, as well as Switch Mobility, which is the Ashok Leyland brand for EVs, and they both have highlighted that a continuation of policy from FAME 2 has been one of the key winners. But there is some couple of points just wanted to highlight on that they will be eligible for giving incentives on the new buses only when the old ones are scrapped, and the same scheme is also applicable for electric trucks. For electric trucks specifically, Tata Motors as well as Ashok Leyland will be the key winners. So overall, passenger vehicles or the car makers are the biggest losers in this particular scheme, while e-buses as well as electric two-wheeler makers are the biggest gainers. Back to you.
All right, thanks so much, Puneet, for getting us those details. Let's get our experts on board. We've got Ashish Maheshwari, Director of Arihant Capital, as well as Kush Bohra, founder of kushbohra.com. Thank you so much, gentlemen, for taking the time. Always a pleasure having you on the program. Let's start talking about what you make of the latest development. Some details still awaited, Ashish, as Puneet was pointing out. But you've seen some of the moves in trade today, and that seems to be indicative of the winners and losers. Would you buy any of these stocks based on this development, though?
Yes, I think this is something like a positive development for this industry per se. Like your analyst was rightly pointed out, except the passenger vehicle, I think government impetus is more towards the users of masses, wherever EV is more used as a mode of transportation for masses, that is two-wheeler, three-wheeler and buses, not the passenger cars. Anyway, those who are buying passenger cars don't bother too much about some small subsidies, what they gain if they buy any EV vehicle. So, in my view, companies like Bajaj Auto, Ola Electric, Hexacom, which make EV chargers, JVM Auto, they'll be one of the major beneficiary. And like you rightly pointed out, Mahindra and Mahindra, Maruti, etc., will be slightly on the losing side. But still, in my view, in broader scheme of arrangement of broader sales by the composition of EVs, whether it's Maruti or Mahindra or Ashok Leyland, is very, very low still. So not directly affected much, and it's just a knee-jerk reaction. But overall sector looks promising in my view.
All right. Thanks so much, Ashish, for that view. Let's jump straight into the questions then. We've got quite a few piling in. If you're writing in for the first time, do tell us your name and where you're logging in from. That'll help you identify when we take up your question. The first one is from Rahul, and he's asking about IDFC First Bank, which he's bought at a price of 76 rupees per share. He's got a considerable quantity, as much as 1,000 shares. The stock is currently trading below the buy price at about 72. And Kush, it's not done too much. In fact, it's in the context of where we are at with so many stocks as multi-baggers, it's been a distinct underperformer so far this year. What would you do with the stock?
Hey, hi, Alex. I think Rahul ought to have a very strict stop loss close to the 70 mark. What's happening is that this stock has, as you rightly said, not been able to perform, but every rise has actually been taken as an opportunity to sell, around the 50-day moving average, which comes in at about 75, 50, which is also below his buying price of 76. So I think this stock will continue to remain under pressure. It's a good idea to perhaps exit, at the moment, it was one of the short candidates, for us also when we were scouting for, hedging position. And also, if he does want to give himself a chance, then and only then 70 becomes a fixed stop loss. Otherwise, the stock might continue to consolidate with a negative bias for the coming week.
Okay. Naveen from Bengaluru has got the next question. Kush, I'm coming back to you on Cochin Shipyard. And he has bought at a price of 553. His profit is a reasonable amount. In fact, quite a reasonable amount. He's not bought a large quantity because he says that he's gaining about 15,139. So he's bought a small quantity, but he's made substantial gains. Would you sell? Would you book some profits, or would you continue to hold?
So first up, I want to congratulate him for holding on to this one all the way up until 3,000. I know he's feeling a lot of pain since the stock is significantly low from those high levels. My suggestion, you might want to consider booking, let's say about 25% of the quantity. And the reason I say that is because even though the stock is in a near-term downtrend, the volumes on the downside now seem to be drying up, which suggests that the stock, even though it could consolidate with a negative bias, there may not be a very big downside from here on. Especially considering the fact that we've already seen a big cut on this one, and a good stop loss or a good support zone comes in close to 1625, 1650 zones. So you could hold the rest of the 75% quantity with that as your trailing stop loss. Even if you exit at that price, you're making 3 times your money, nearly about 3 times the gains on this one. So book partially, so you get these prices as well, and hold the rest with a trailing stop loss of 1625.
Point. All right, Ashish, I'm coming to you on BEL, and this is a question coming from Ashok. He's writing from Bengaluru. He's holding 150 shares, which he's bought at levels of 296, and he's wondering whether to keep holding. On the fundamentals, would you hold on? Because again, this is a counter that a lot of people have bought and held for some time. It's at elevated levels. If you can, if you can look at the business, if people have talked about the valuations being a little bit of a stretch, would you hold on at this price?
If we see compared to the performance of HAL and other PSU stocks, still BEL has done reasonably well. From a high of, I think, 340, stock is just at 290 odd rupees only. So just 10% fall from the highs. In my view, as the euphoria around, which was around the PSUs or defense, etc., is slightly softened now. So this is the reason the stock are languishing in slightly narrow trajectory. But BEL is again a company that you can't go wrong. Even the valuations, etc., whatever we talk, they will continuously have inflow of new orders in this year also. So this company will do well. in my view, you can remain invested here at 290 rupees. And in fact, if it comes down even to 280, it's a buy candidate.
All right, so it's not too far away from an accumulate category. We've got the next question from Karna. Karna is asking about Adani Green Energy. What is the reason for the consolidation? Is there anything in the way that the charts are developing, Kush, that would give you an idea as to why there seems to be a little bit of consolidation in this stock?
So this stock has had a fair share of volatility. If you see, around early June, but from there on, as Karan has rightly pointed out, there has been a long period of consolidation. The volumes haven't really picked up, except for those days when the volatility has really been all that great. Now, as far as the broad range goes, it's 1700 on the downside and about 1900 to 1925 on the upside. There isn't much that is suggesting that, in the near term, it is going to break out of either of the, zones. But, whichever direction it breaks will perhaps be the, deciding trend for the medium term. Now, one of the reasons for consolidation is that, the volumes, as I said, have been missing for the most part, except for the days when the stock has seen, any kind of spike or volatility. So pretty much directionless. If you've got a position, then 1700 support zone or the lower end of the range should act as your stop loss. But if you don't, then I would suggest, perhaps this is still on the wait and watch list. No fresh entries recommended.
All right. Let's move on to Raymond Limited. That's the next counter. Oh, before we do that, actually, the standard disclaimer, this is NDTV Profit. You're watching, and it is part of the NDTV Group, which is owned by the Adani Group. Raymond Limited is the next counter that we're talking about. It's currently trading at 1,855, down about 3% in trade. And we've got Yagnesh, who's bought for the long term at slightly elevated levels. If you look at the current market price, he's bought at levels of 1,945, and he's wondering whether to add more, to accumulate more in the current dips. After the split or after the demerger, Ashish, what's the view on Raymond Limited?
Yeah, in my view, the major event, which was demerger, is now already over. So whatever the euphoria which was moving the stock is now going to be over also. But at the same time, company is doing well. And if we see the peer set players in the same sector, they are also doing reasonably well. So in my view, you can remain invested in Raymond. My target for next 3 months here, once this quarterly numbers comes, 1950 to 2,000 rupees. So remain invested here. Fundamentally good company.
All right, fundamentally good company, Raymond Limited. By the way, we've got quite a bit of analysis on the site as well, ndtvprofit.com, in case you want to read about it. Excuse me. We've got the next question on an IPO rather. Actually, we've got Gajjar from Ahmedabad who subscribed to the Bharti Hexacom IPO. He got allocation, and he is in fact sitting on quite significant profits. He's wondering whether to hold or to sell. Since this is based on the IPO purchase, Ashish, there must have been a fundamental drive as to why he's bought. Would you suggest holding on at this juncture?
I'll advise to remain invested, though you got share allotment 570 rupees and the stock is now almost 1,260. But fundamentally, this company is doing very well. We have seen very good quarterly numbers also in this company. So remain invested. These are the Bharti Group stock particularly are doing well, whether it's Bharti Airtel or Indus or Bharti Hexacom. So in my view, 1,500 should be your exit target and by end of this year.
All right, Neha has got the next question. She's asking about Globus Spirits. She's saying that she's looking for the next 3 months, or she's planning to hold for the next 3 months. Stock is currently at 1219 or thereabouts, and she's sitting on profits of between. She's named a couple of stocks, but I'm only choosing to speak about Globus Spirits. She's saying she's sitting on profits of over 30%. Kush, on the charts, how does it look, and would you hold on to this? At what point would you consider selling?
So first up, congratulations to Neha on this brilliant buy and riding, this stock all the way up until a 30% gain. The stock's had phenomenal run, over the last month or so. So I'm assuming it's a fairly recent purchase. So kudos on, the right entry and riding this stock. My suggestion, what you're seeing in the last couple of days is perhaps only profit booking after the kind of sharp run up that the stock has seen. Not a bad idea to book partially because 30% in a shortish time frame is a phenomenal kind of a return. But the stock does seem to have more legs on the upside. So for me, I'll hold the rest of the quantity with a trailing stop loss of 1175. And once this profit booking and this brief round of consolidation settles, the stock could very well resume its uptrend towards 1300 and higher levels. So book partially, hold the rest with a trailing stop loss at 1175.
Okay. Chanakya from Hyderabad is writing in, and Chanakya, I love your name. GPPL is the name of the counter. Gujarat Pipavav Port is the counter that he wants to know about. He's also saying that he's been asking a question for a long time and he's only just getting an answer. Well, we do try and take as many questions as possible, Chanakya, and today is your lucky day. He's bought at levels of 220 and he's holding 1,500 shares. He's been holding for the last 6 months. Should he hold for another few months because his target is 290 specifically? What's the view on the charts? Kush, I'm coming back to you on this one.
Difficult to challenge Chanakya Niti, isn't it? But yes, I wouldn't be too constructive on the stock purely because there has been a long round of consolidation. The bias here is negative. It is testing some of the near-term averages, below the 20-day moving average today, but dearly holding on to the 50-day moving average. So my suggestion, if you've got a very constructive view on this one, if you want to hold on and if you've got your reasons to buy this, hold this with a trailing stop loss at 210. There, the medium-term support sort of kicks in. There is a possibility that you might have to hold on to this one for some time because it moves, or rather, before it moves higher to 240 and then about 265 kind of zone. Because the consolidation period is ongoing, the momentum indicators are suggesting, a sideways trend. So 210 is your stop loss. As long as that is held, you could continue to hold, and you might have to wait a little before you see any kind of, a big up move on this one.
Okay. We've got a question coming from Pandi, and he's asking about CDSL, which he's bought before the split. He bought it before the split at a price of 2,905. Well, it's roughly trading at the same level. It's not done too much post that. It's currently at 1369. What's the view on the fundamentals? Ashish, I'm coming to you on this one. A lot has been said, of course, over the course of this year about CDSL and some of the other counters that depend on stock market participation and the growth of investor base. But would you hold on at these levels?
I think the post-bonus, they came out with an 1:1 bonus.
Sure, it's a bonus, right?
Yeah. So post-bonus, I think this is slightly consolidating because the stock moved quite swiftly on anticipation of good result and bonus, etc. And that is now slightly absorbing the prices. But fundamentally, till the time NSDL get listed, you are having only one depository to take position, which is CDSL. So momentum will continue here. Only thing is some consolidation phases going on. So this is why stock is in narrow range. But in my view, as soon as you might observe, as soon as BSE start moving, CBSL, etc., they'll also follow this stock. So remain invested is my call on this with price target of maybe 1,500 in next 3 months.
All right, that's a very short time frame. Nelcast is the next counter that we're looking at. In fact, Subramanian from Chennai is asking about this. He's looking at a short-term perspective on this. He's bought 100 shares at a level of 103. Can he sell now and buy at a lower price is what he's asking. He's in the green. What are the possibilities, Kush, that he can do that?
Technically speaking, quite stark. The reason being that the stock is in a downturn. It's a good idea to, as he's rightly identified, the trade to, perhaps book now and, look to accumulate at a lower level of perhaps 130, even 125, because, there is fair bit of pressure that you're seeing on the stock. All rise, every rise has been taken as an opportunity to book profits. The spike on the daily chart haven't really sustained. So this suggests that, there is a fair bit of downward pressure on the stock. So not a bad idea to exit at the moment. The levels that you want to start accumulating this is close to 132 and then perhaps a 127. So rounding off to 125, 130, those zones. But yes, this is a prudent strategy that Subramanian has considered.
Okay. I'm going to take a chance and ask you about Electroforce. Do you have a view on this one, Kush? And we've got viewer Gautam from Mumbai who's bought at 105. He's got 2,400 shares. He's looking to hold for the next 12 months. He's incurring a loss right now. Were you able to pull it up?
Rightly identified. I haven't been able to even pull the chart up. I'm going to have to give it a miss.
Okay, fair point. Any chance you heard of this one, Ashish? Do you have a view on Electroforce?
It's a SME listed stock. Almost after that initial euphoria from 66 went up to 150, and now everything is over. So stock is came back to those levels. Nothing fundamentally, to recommend with. In my view, this is the time that you should look at more frontline stocks or quality mid-cap stocks rather than these SME stocks where offloading is already done at the heights.
Yeah, that's a fair point. Be wary, because we had a metric, I can't remember exactly what, but Neeraj was talking about it earlier in the week or last week, where a large number of SME IPOs over the course of this year are now trading, or companies that have been listed over the last couple of year or so, are now trading below their listing price. So be wary of what you're buying into. Kush, you have a point?
Alex, just to add to that point, what's happening is that earlier a lot of these moves used to happen on the listing day itself. Now what we are seeing is a very interesting trend, which is a lot of these IPOs, they get listed at a premium, they trade at a premium for let's say a week, maybe a month, and then they start to give way. So you need to look at a slightly medium to long-term picture if it may be, but at least beyond a month or so. So Electroforce, as I see the chart, listed I think at around 100 or so, moved all the way up until 150, and then it's now trading at 72. So the initial move after the listing should also not be considered as a victory, and retail traders should not be sucked in. So just a point to add to what you were saying.
Yeah, that's a fair point. Gayatri's got the next question. I'm coming back to you on this one, and this is on Adani Power. She's asking a very simple question. I think this is a basic question that all traders will have. Will it increase or decrease from this point? What are the key levels that you're looking at, Kush, on the charts? And would you suggest a 1 month trade? She's already bought 16 shares at a price of 658.
You boil it down to the absolute basics, and that's what the market is all about, isn't it? Upar jayega ya niche, right? But yeah, I mean, if only if it were that easy. What I'm looking at from a near-term perspective is the 200-day moving average support, which comes in at 610. I wouldn't really venture a buy just yet because, here too, you're seeing some downward pressure. Again, the saving grace here is that on the downside for the last about 8 to 10 odd sessions, the price action has been lower, but the volumes have also shrunk, which means at the end that the selling might perhaps be nearing. Plus, then there's this strong 200-day moving average support. So 610 is the level that I'll watch for. If that gets broken, then perhaps things will get a little more negative for the counter. But otherwise, there's a possibility that it might take support here and consolidate for some time.
All right. Bala from Bengaluru is asking about Happiest Minds, which he's bought at levels of 893 or thereabouts, 210 shares. What is the advice? Would you hold or would you exit at this point? And Ashish, based on the fundamentals, what's the call?
The fundamentals are quite okay for Happiest Mind, and this is again a stock which moves in a typically 100 rupees zone in the entire 1 year. If you see 50 with high low, just 20 rupees gap. But again, fundamentally good stock, but you need to wait for some rally in IT stocks, then some momentum will be here also. My target for Happiest Mind will be 900 in the next 6 months.
All right. Ashish, Kush, you're both familiar with this. I'm going to take the next 2 minutes as a rapid fire round. It won't exactly be rapid fire in the traditional sense. I will give you time to think and to give your answer, but keep it as short as you possibly can. Let's start with Canara Bank. 100 shares bought at 103. We don't have a time frame, so I'll come to you, Kush, on the technicals. Kaushik is asking, should he hold or sell?
Exit.
Exit. All right. That's a quick answer. It's faster than I was anticipating. Syngene is the next counter that we're talking about. It's been bought already. Praveen is asking whether it should be held. Since there's no time frame, I'm coming to you, Ashish, on the fundamentals. Would you hold on to this?
Hold and buy more.
hold and buy more. All right, Kabilan from Chennai is asking about Tata Power, which he's bought 1,000 shares of. He hasn't named his buy price. Can he keep or sell? On the fundamentals, Ashish, would you hold or sell?
Hold.
Hold. Hudco is the name of the counter we're looking at next. Bought at a price of 159. Is it a hold or sell recommendation? Vijay is asking. Kush, on the charts.
Continue to hold. The trailing stop loss for you now is at 230.
Okay. Sale is the counter. I'm coming back to you, Kush, on this one. Hemant Oswal from Bengaluru is holding from levels of 110. He's in the green. Should he continue to hold?
Exit and book profit. Just today we've initiated a short call in our advisory service on sales. So my suggestion is to exit at the current levels.
Okay, very quick last one. BPCL, would you buy at the current level? Kush, any view on the charts?
No, I wouldn't. The only stock that looks in the space, looks good in the space is HPCL, IOC and BPCL both consolidating, so that's an avoid.
Okay, Dhampur Sugar, again for a period of 6 months, holding 266 quantity at a price of, I believe, 266 is the buy price. Would you hold on, Kush?
Exit.
Exit. All right. Cochin Shipyard we've already taken, but just a quick view on the short term. Would you hold if you bought at 1831, Kush?
Hold with the stop loss at 1625.
Yeah, I've been particularly tough on Kush this time. I've been sending a lot of questions his way. Gentlemen, thank you so much. Thank you so much, gentlemen, for taking the time. Kush as well as Ashish, thank you so much, as always. Well, that brings us to the end of this particular edition of Ask Profit. It's been an absolute pleasure bringing it to you. We'll be back tomorrow to take more of your questions. So do keep them coming and do stay tuned. Lots more coming up on NDTV Profit.